Good morning, traders. This is Evelyn from Astra Montis, and I'm here to bring you the latest insights for the week of July 15th to July 19th, 2024. Let's dive into what to expect in the upcoming week. This week unfolds against a backdrop of intense global economic scrutiny and anticipation, as markets pivot in response to key developments across major economies. From the European Central Bank's policy meetings and pivotal inflation data in the UK to slowing economic growth in China and consumer spending trends in the US, the landscape for investors and alike policymakers is rife with uncertainty and opportunity. The upcoming data and decisions are poised to shape economic strategies and market sentiment, highlighting the dynamic interplay between domestic policies and global financial trends. The European Central Bank ends its two-day policy meeting on Thursday with no changes in interest rates expected. After last month's 25 basis point cut, the June decision was controversial, as policymakers cut rates before all data was available. Amidst rising inflation and wage growth, the ECB defended its cuts by highlighting the risk of missing its inflation target if delayed. Since then, inflation has slightly decreased and wage pressures show signs of cooling, while a majority supports at least one more cut in 2024. Thursday's meeting will likely see rates unchanged, with further decisions deferred to September. The British pound has rallied in July, boosted by a softer US dollar and Labour's decisive general election win. However, despite headline inflation reaching the Bank of England's 2% target in June, services inflation remains high at 5.7%, as noted by the bank's chief economist Hugh Pill. With the British economy showing renewed growth, there is no immediate urgency to lower rates, with markets splitting on an August rate cut and policymakers likely undecided. Next week's updates on inflation, employment, and retail sales could be decisive. In the U.S., the Federal Reserve is not rushing to cut rates, though investors are betting on a September move. Inflation is gradually decreasing, and Chair Powell's a surprise increase in retail sales could halt the dollar's decline. Investors will also monitor manufacturing data from the New York and Philadelphia Feds, as well as key releases on Wednesday, including building permits, housing starts, and industrial production. Investor and consumer confidence remains low in China, affecting business and household spending. Industrial production shows some signs of life, but retail sales remain sluggish. June's readings for both will be closely watched on Monday. Along with the Q to GDP estimate, China's economy likely grew by 1.1% in Q2, down from 1.6% in Q1. The annual growth rate is expected to have eased from 5.3% to 5.1%. In Canada, unexpected inflation in May dampened hopes for a July rate cut, unless June's report shows easing. The Bank of Canada may hold rates until September. The Box Business Outlook survey on Monday and retail sales data on Friday will also be scrutinized. New Zealand's quarterly CPI data on Wednesday is crucial for rate cuts bets. The Reserve Bank of New Zealand's recent dovish tone hinges on inflation hitting its 1 to 3% target. If Q to CPI data aligns with this, the Kiwi may face selling pressure. This week has been marked by significant economic developments worldwide, from the European Central Bank's cautious stance on rate cuts and inflation tests for the British pound, to the slowdown in China's economic growth and critical CPI data from Canada, Japan, and New Zealand. The global economic landscape remains dynamic and challenging. Stay informed as we continue to monitor these developments closely for their impact on markets and investors moving forward. To conclude, as we navigate through this week's trading landscape, it's essential to closely monitor these significant updates. We appreciate your confidence in our insights and wish you prosperous trading in the days ahead.